I'm very positive about the direction because it is clear, I hope, to everyone here that this is a one-way street, that the upgrade of money and economy and how we do things is one way, but it's a little bumpy on the way.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, ladies and gentlemen, I'm going to be displaying to you all some information that the mainstream is never going to share with you, playing some video clips and just really educating you all on what's actually happening behind the scenes, zooming out, having a long-term perspective, and not being so short-sighted when it comes to this digital asset ecosystem. With that being said, if you all enjoy these in-depth video breakdowns, do us a favor, smash that thumbs up button and subscribe. We're going to be getting into crypto, getting into DeFi, showing you guys the realness, the research behind the scenes, how it really pays off to educate yourself in this space. So we're going to start here with this post where I said, it's disheartening to see many people discouraged about the current state of the crypto market without fully grasping the broader context of the macroeconomic factors and trading dynamics currently impacting crypto. The recent pullback in crypto markets from their 2024 highs of around 2.7 trillion has largely been influenced, let's understand why, by the strength of the dollar, driven by elevated inflation and the resilient US economy. Additionally, escalating geopolitical tensions in the Middle East in April prompted investors to flock to safe haven assets like the dollar, which diminished the appeal of riskier assets such as cryptocurrencies. So that is why in the middle of March, we started to see a pullback in the digital asset ecosystem from roughly around $2.7 trillion down to almost $2 trillion to the T. Currently, the market seems to have overestimated the likelihood of imminent Fed rate cuts at the end of 2023 and into 2024. As the sentiment around rate cuts has cooled, investors have adjusted their positions, resulting in net outflows from the crypto market over the past 2 months. So now that you all understand why we've seen a crypto market downturn recently. Again, nothing significant, right? A few $1 billion, but still a market slight retracement. However, it is crucial to recognize that despite the short-term fluctuations, there are positive developments unfolding behind the scenes in crypto.
I think when we look at the last year or two, crypto has really evolved over this time to become a very mature, in my perspective, quite mature where it came, from where it came from. So I think we've seen institutions validate it. We've got a lot of enthusiasm with the Bitcoin ETF. That's huge news, including big institutions like BlackRock coming in with that. So I think while we're in a bear market, we've never been in a better place, I think, in terms of visibility and credibility in the space.
Michael, how's it been for you?
And what we're dealing with now is, it seems more like a hiccup, right? You kind of have global markets going risk off, right? And that includes venture funding, and that has kind of caused, especially the B2C dApps, to kind of struggle a little bit. But in order to kind of fill that vacuum, you've kind of seen the chains step in, right? So the chains were able to raise a lot of capital in the last cycle, right? And they have very, very deep token treasuries. And they're highly incentivized, right, to grow ecosystems on their respective chains. And so they've kind of stepped in to fill the void left by venture capital firms, right, to fund those ecosystems. And so I think there's a kind of a asymmetry between maybe what the narrative is and actually what boots on the ground kind of looks like in terms of there's an order of magnitude of dApps that are just in build mode right now that are going to be launching over the next 6 to 12 months.
The market continues to innovate and build out the infrastructure necessary to accommodate large financial institutions, affirming the long-term viability of this space. Ladies and gentlemen, I cannot stress enough, this tweet will age well, okay? We need to shift our focus from the short-term speculation and zoom out to see the bigger picture. The crypto market will, for a fact, recover. It will eventually soar to new heights.
What are you excited about for the future and or worried about?
I mean, I think we're at a great point where we're getting towards mass adoption. There are 400 million people now with a Web3 wallet. I think in this next cycle, we can get that past 1 billion people.
Yeah, I'm excited about the fact that I think products are becoming increasingly useful to people in their everyday lives. And to Bill's point, that's how we're going to win. I think winning is inevitable, which is kind of shocking to hear from someone who works in policy. I do think it'll take a while, but yeah, it's all going to work out.
It is essential to understand that currently around 95% of transactions in this space are driven by speculative trading. Consequently, we are not seeing positive price action on utility assets because there is no significant trading activity on those networks. And I'm going to show you that in today's video breakdown. However, as we transition into a utility phase, this dynamic will change. Utility assets will gain traction, driving positive price action as their inherent value becomes more apparent. So will short-term volatility. It may be discouraging now, but it's crucial to maintain a long-term perspective and recognize the imminent potential of this evolving market. Okay, so now that that long post is out of the way, let me show you guys in depth what it is that I'm talking about, piece by piece by piece. I have some tabs open. I'm going to be playing some more video clips in between. So stick around for the entirety of this video breakdown and share these videos. These are educational videos, really showing you guys information that the mainstream is never going to show you. So I posted this to you all. On the XDC network, a blockchain renowned for its efficiency and versatility, several innovations and real-world asset projects have emerged. Comtech Gold, Fluent Finance, Status with the Euro stablecoin, TRADFI, Status Euro, Kinesis, right? The XDC network and the ecosystem continues to evolve during the bear market, during the market downturns. They're continuously making developments. They're continuously striving for utility. Yet we see individuals like this comment and price goes nowhere. This shows me a lack of education, a lack of foundational knowledge, right? I said to this individual, price goes nowhere because there is currently no trading activity on the XDC network. And you can see this yourself by tapping into the TVL display. As long as we are in a trading environment, none of these assets with utility will move, right? You can go look at this yourself. We are in a trading environment where 95% of the digital asset transactions in this space are due to speculative trading, which is why Ethereum, if you go look at the total value locked on Ethereum, it's roughly around $52.9 billion right now. You can go look at all the DEXs and the lending protocols and the staking activity and the liquidity providing that is happening on the Ethereum chain, right? Now, if you go and you look at the XDC network in comparison, albeit yes, XDC has way more utility than Ethereum. It's faster, it's more efficient, it has lower gas fees, smart contracts are better on XDC, everything, right, is better on XDC, in my personal opinion, if you actually do the comparison, right? But if you look at the total value locked on the XDC network, it is a mere only $8.8 million, which is nothing in comparison to the Ethereum network, right? Which is why XDC, as of right now, is the price that it is. It's not being utilized for its utility. And there are no DEXs that are offering, very barely any DEXs that are offering trading and the ability to provide liquidity for XDC trading pairs. You can see right here, there are only about 5 platforms that are offering the ability to involve themselves in the XDC network behind the scenes. In comparison to the Ethereum network, you can see there is hundreds of platforms where one can provide liquidity, where one can earn yield, where one can lend, where one can farm, where one can do all these things, right? On Ethereum. That is not readily available quite yet for the XDC network, which is why the price is the way that it is. So when you understand this, you won't be one of these naysayers that's so zoomed into the now and understands that XDC and the XDC network they're building, they're in the process of making all of this happen for the future, right? So just again, zoom out and have a long-term perspective, educate yourself and stop being so narrow-minded and closed-minded. And remember that we are in an age of information. Another thing I want to point out, okay? As of 2024, blockchain has gone from being a niche interest to a key tool that supports many industries. It represents the transition from a narrow, old-fashioned path to a modern digital economy, marking the start of a new period of efficiency, safety, and inclusiveness.
6 to 12 month scale, I think a solid 9.5. And I don't think that's priced into the markets yet. And I say that not to diminish the trauma that we've faced in so many ways, markets up and down, companies coming and going, but in the fact that despite the relentless near-death experience, Celsius 3 Arrows, Terra Luna, FTX, Silvergate Signature, we're here. And every monster we slay makes it easier to slay the next one. So I'm very positive about the direction because it is clear, I hope, to everyone here that this is a one-way street, that the upgrade of money and economy and how we do things is one way, but it's a little bumpy on the way. But I'm encouraged that we're here and that I'm very positive about the direction because it is clear, I hope, to everyone here that this is a one-way street, that the upgrade of money and economy and how we do things is one way.
Right? The old world is dying.
Ultimately, the government likes intermediaries, be they Western Union, JP Morgan, or the New York Stock Exchange, in order to implement their policy objectives. And that has been possible given the fact that you needed those financial intermediaries to engage in pretty much any economic transaction historically, except for cash in person. That world is gone, and the regulatory and policy world, I think, is not only going to take a while to catch up, but take a while to come around to the utility and benefits of that, or at least come around to the fact that it's not going away.
And that is something that everybody needs to understand, regardless if you agree with it or not, or you're educated about it or not, it will move without you. When you understand that, you will stop being a person like this, right? So this is an individual that goes on to say, I'm in my 20s right now. I want a house, I want kids, and I want to get married, but it seems so financially out of reach. It seems like it's never going to get any better. Well, complaining and crying about it on TikTok is not going to make it any better. Sitting in your car and complaining to the internet about it not getting any better is not going to transform your situation. It's not going to get you out of the rut. What is going to get you out of the rut? Educating yourself on the possibilities and the opportunities at hand through this new technology. So that leads me over to a post in collaboration with this one, where I said, don't make excuses for being broke and being unable to afford common goods. There is the difference between a poor mindset and a rich mindset. Now is not the time for excuses. We are in an age of information. It is time to understand that we can be our own bank. We can make passive income effortlessly by utilizing decentralized finance, crypto, and this whole entire Web3 ecosystem.
Sure. So if you're already living in a crypto native economy, right, you're holding Bitcoin, you're holding Ethereum, the natural question becomes, okay, what can I do with it, right? And, if we're going to build up finance in a totally decentralized way, we have to reabsorb these old use cases from the financial world. Lending's a really obvious one. Aave, Compound, there's a bunch of popular protocols. I particularly like Thorchain because you can use native Bitcoin, native Ethereum. They just launched lending as well, but there's no wrappers, there's no bridges. It really takes a lot of the intermediaries out of the process and just lets you hold your own custody of that native asset and put it to work. Just lets you hold your own custody of that native asset and put it to work.
Now is not the time to be making excuses and to be one of these individuals that's sulking in their car, crying about how they cannot afford groceries. Now is the time to figure out how you can make passive income by earning yield or by being a liquidity provider and making your money work for you, right? Even if it's a very small amount, there is such thing called the compound and snowball effect. Learn about it. Understand where this DeFi market is headed, where the cryptocurrency market is headed. Right now, the DeFi space as a whole, you can go look at the total value locked in DeFi as of right now is $90 billion. The DeFi space, one within itself, looking at this projection right here, which I think is a low ball, and I'm going to show you guys that in today's video breakdown, is set to reach 230 billion by 2030, which is a significant increase compared to the current market right now of 90 billion, right? So now is the time to get involved. You can be your own bank. You can make passive income through DeFi. Again, it requires education on your behalf. It requires proper risk management, but through knowledge and education and joining a platform like ours here at CYPRX, which we're in the process of building out right now for you all to get involved in DeFi, to educate you all on the possibilities at hand, again, you can prevail. You can step away from this mindset, this toxic, negative, pessimistic mindset where an individual does nothing but complain and move into the rich mindset, move into the wealth transfer mindset. Right? Now, this is another very interesting one because on a panel discussion, a gentleman goes on to say that there are wealthy clients from Franklin Templeton that have $1 trillion of assets under management that are interested in this crypto space. Take a second and listen.
I still remember like the week of FTX, all of our clients sent me 20-page questionnaires that I needed to fill out. And it was one of those things where thankfully we had a lot of the answers like ready to go off the bat, but it was very clear that everyone was trying to basically catch up on what they had not been doing, which is, trying to really dive deep and understand, to what level of transparency do people have providing, for example, things like finances or whatever it might be. Right? And so there was a big rush for, I guess a couple months around proof of reserves. That's kind of tailed off a little bit recently. But on our side of things, we were kind of like fortunate. We said, hey, actually, we've got an audit from Deloitte. Do you want to see that? And they're like, we didn't even know that that was a question we could ask. So there's been more and more scrutiny around this, which I think is generally good. It also, I think, converges closer towards, what best practices people have when they're managing billions and trillions of dollars, which is kind of where we need to go to, right? That's what we want to see, right? I mean, it's funny. The other day we were sitting in Token, and our CEO was sitting next to the CEO of Franklin Templeton. And he kind of did a friendly reminder. This lady over here manages $1.5 trillion, which is about the market cap of crypto, right? So there's an element of there's a next stage that we're all going for, and I think that this pushes the maturity towards it, and I think it's a good thing.
And here we see a post where it goes on to read the SMSF portfolios of high net worth holders, $50 million plus, have on average 500% more crypto than those of affluent sector investors, 200,000 to 5 million ranges. So what does the Australia super rich know that the rest don't? And here you can see some screenshots. Again, the rich, the wealthy, they know that a transfer of wealth is happening. They know that the old traditional way of investing is dead. They also know that we are in the midst of a technological super cycle, okay? An age of digital transformation, the fourth industrial revolution. Take advantage, ladies and gentlemen. I'm telling you all, you cannot make this stuff up. And guess what? The mainstream media will never show you a post like this. The mainstream media will never, ever show you a video, the one like I just showed you all right now, right? Take that into consideration. Again, make sure that you're subscribed to the platform so you don't miss a beat on any further video breakdowns. Now, this one was very interesting where I said, honestly, this PDF will age very well. Augmented reality, digital technologies, a cashless society. It is all coming much faster than you think. How will you adapt? Will you experience and be part of this wealth transfer? Or will you be one of these individuals that does nothing but sit in their car and complain to the internet instead of utilizing the internet and Web3 technologies and this digital transformation to their advantage to change their whole entire family freaking bloodline? Okay, so here you can see them mentioning in this PDF, cash will be but a distant memory. You can pause this and you can read this if you would like. Wearable technology will blur the lines of reality. Obvious, of course, augmented virtual reality that is coming 110%. Metaverse, skins, metaverse identity, everything that is all happening within the next 5 to 10 years, whether you like it or not. Digital entertainment will take center stage, 110%. And this was all accelerated by what? Zoom in right here. What does this say? CV19, okay? All part of the systemically implemented plan to enact digital transformation on a global scale. Last but not least, we have a gentleman going on here to say that in the wake of, in the fallout of FTX and Three Arrows Capital and Terra Luna, DeFi did not go away. DeFi did not go bust.
When you saw the CDFI lenders like BlockFi and Nexo and Celsius kind of blow up, right, due to the contagion, did DeFi blow up? No, they didn't.
DeFi will only continue to scale. And when you see that, and you see that there is an opportunity to be made through DeFi, again, through lending, through compounding, through staking, through earning yield, passive income by being a liquidity provider, you will truly understand the possibility that we have as manual retail investors to grow and scale our wealth. This post goes on to say, as the industry starts to emerge from the fall of the 2023 bear market, more people have started to look into DeFi as an improved form of finance. Projects like Xerim Finance are leading the charge and bridging the gap between mainstream and DeFi adoption. Now, I'm not going to go into detail and read this, but again, it's just signaling to us as manual retail investors that they are building out an infrastructure in order to make it easily accessible for the average everyday user to onboard into this space by creating DeFi debit cards, right? By creating a physical debit card that can be utilized in real life in the exact same manner as users' traditional debit cards, Xerin is creating a familiar, easy to onboard entry point for users into DeFi. They are in the process of onboarding the next 500 million users to equate to 1 billion. Are you going to be a part of that transfer of wealth, that new fluctuation of money that comes into this space? Or are you going to sit on the sidelines and cry like this person? Are you going to sit on the sidelines and whine that your favorite digital asset is not moving in value without actually understanding why it's not moving in value right now? Hopefully, if you're a follower of ours here at CYPRX, you're not going to be either of these two individuals, and you're going to be the type of individual that's on the side with us, that's on the side of educating oneself, that's on the side of taking advantage of these opportunities through DeFi and crypto investing in the now while we have the chance, while the valuations are still low, because the money is coming. And I cannot stress enough that the people that have these weak, saturated mindsets because they're so fixated on the now will get left behind. With that being said, many blessings to you guys. I hope that you all enjoyed this video breakdown. Remember, this is not an attack on any individual one person. This is just to show you all the things that the mainstream media is never going to show you or bring to light. With that being said, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. Don't forget that towards the end of the month of May, we will be releasing our DeFi University, where we will be delivering in-depth course material on how to involve yourself in DeFi, how we are personally growing portfolios in DeFi, and so on and so forth, allowing our cryptocurrency to work for us. If you all want to be a part of that, then make sure that you stay tuned. Follow us on X, follow us on YouTube, and I'll see you all in the next video breakdown.